How's it going out there? It's March 17th. And I'm Frank Curzio, host of the Wall Street Unplugged podcast, where I break down headlines and tell you what's really moving these markets. Have to start out by saying happy St. Patrick's Day. Some of you might notice I am half Irish. My mom is 100% Irish. My dad's 100% Italian. But yes, I have the name Curzio. So we celebrate St. Patrick's Day. I love it. Great holiday. Yes, us Irish people like to drink. So, of course, I'm wearing my green today. Kind of like aqua, but it's, pretty close to green. I'm colorblind, so I really can't tell. But we send our girls to school with green and stuff like that. And for all of you who watch this on a Curzio Research YouTube page, because we have all this stuff, right, in video for you. Again, just go to Curzio Research YouTube. Video and everything, all of our interviews, everything really, really cool. But I took a picture of my daughter here that I'm showing right now. It says, "Kiss me, I'm Irish." She smells, she's dressed in all green. And I wanted to ask you who are watching this is which looks better, her? And by the way, I'm going to bring up a picture of myself, and it's the same shirt that's on her, the same size. So, yes, I'm sucking in my gut as much as I can, and it's still not working. But when you see this picture, yes, you're not going to see a 6-pack, 8-pack, or anything like that. But I'm pretty sure she wears it better. Pretty sure, anyway. But, no, all cool stuff. And happy St. Patrick's Day to all the Irish, everybody out there. It's just a fun holiday. So, 1 year ago today, the entire world began to know how dangerous and how real COVID-19 was. Major news organizations, and talking about this week in 2020. I went back and actually looked at the Google search and everything like that. They're reporting things like the White House has advised people not to gather in groups of more than 10 people. France has banned all family and social gatherings and closed its borders. Canada will deny entry to anyone who isn't a citizen or permanent resident. The New York Times, their biggest headlines on March 16th, when it was getting crazy with COVID, was, Trump says he's strongly considering pardoning Flynn. Does Florida really want ex-felons to vote? But they did have a couple of COVID headlines in the middle of, doing everything they can to destroy Donald Trump 40 times a day. Like, man, a man with 17,700 bottles of hand sanitizer just donated them. Another headline from the New York Times is, how to work from home if your company closes its offices. So everyone was getting very familiar with COVID. And this is around the time we started to close restaurants, bars, gyms, almost everything, right? Being mandated to be closed. We're running out of ventilators, very scary stuff. Don't forget that. And confirmed COVID cases were just 14,000 total for the U.S. Total. Of what we knew, it was probably well over 100,000, but that's when we just began testing. And to put that in perspective, today, looking at cases, and actually we'll go back to December, it was 50,000 a day. Remember, it's 14,000 total a year from today. But in December, 50,000 cases. Around 30 million people today have had COVID in the U.S., while 535,000 people have died, which is an unbelievable number, right? It's very sad. So during this time, we just started to learn about this dreadful virus. Everyone was really scared. They should be. It was something new, something never happened, something we never saw. We didn't understand it. And now every single state, it was 14,000 total, had confirmed cases. We were watching the death rate start to spike in other countries, through Europe, Italy, France. The entire world was put on hold. And what was really cool about this situation, you find a positive from it, is every large cap pharmaceutical company, biotech company, scientists, doctors, everyone joined together, started researching the shit out of COVID, launching studies, launching major research reports, research projects, learning how it spreads, who it targets, how it could prevent the spread of it, how to keep people alive once they got it, along with how can we come up with a vaccine as fast as possible. That will help us eradicate the virus. And the quickest we had a vaccine come to market was 4 years. It's pretty amazing when you look at what these pharmaceutical companies were able to do to come out with a vaccine this quick. Pretty awesome. But everyone was doing everything in their power to learn about COVID-19. I thought that was pretty cool. Everybody just coming together. Now, in 2 months' time, say around May, a lot of this data was being published. We learned so much about this disease by May, like how young kids don't really get it easily. And now if you're under 12, you have close to the same rate as dying from COVID than dying from the flu. This is based on CDC data. This is a CDC. Don't get mad at me. Don't send me an email, Frank, because of research. Send it to CDC if you're pissed off. I'm just reporting what's on their site. We learned that this disease is incredibly dangerous for people over 65, and even more dangerous if you're over 65 and an underlying condition, so we know who it targeted. So during this time, we had doctors, scientists, suggestions were made to stay 6 feet apart and wear masks at all time. Now, that was not based on science. That was just common sense, especially on masks, which, why would you wear a mask? Because it's going to help you avoid a stranger from basically spitting in your mouth, right? From their mouth. They call it droplets. And that's going to prevent it, which only happens if you're basically intimate with someone, or if you're talking inside of 2 feet, which almost only happens when you're talking to people that you know. But we all had to wear masks. And they said the science and the data. No, not really. I mean, everyone bought it. 6 feet of distancing. Wear masks at all times. Even when you have sex with your spouse, they were telling you to wear a mask when you have sex with your spouse. Obviously, they probably didn't have a spouse. Be sure to wash your privates with antibacterial soap. Wash your hands 20 times a day. I thought it was funny how doctors and politicians started comparing it to the Asian culture, which failed to mention that, they wear masks. You see them wear masks when if you I went to China, when you see them wear masks, but they wear masks when they're actually sick. They forgot to mention that. They don't wear masks when they're not sick in hopes that they're not going to spread a disease they don't have to people they don't know. No, it's not why they were wearing masks. They didn't explain that. You didn't need to explain that. It's okay. Doesn't matter. But saying masks prevent the spread of COVID is like saying if you wear a hazmat suit, you will not be infected by anything ever, which is, pretty cool. No kidding. You're wrapped in a plastic covering all over your body. We don't do that because we have pretty good immune systems, fights off tons of diseases and viruses, and there's significant consequences for us wearing a hazmat suit 24 hours a day. Remember that point. Significant consequences. The significant consequences of making big decisions are what happens if you make a decision and what happens if you don't. I'm going to explain this very important point in a minute and get back to it. Now, I always question mask use, but I wore a mask. I wear a mask now when I go to stores, indoors. I have Curzio research masks made up for my employees. Basically wear it out of respect to older people who should fear contracting COVID-19. I get it. But for me, my family, me, we already had COVID, so I'm not going to catch it again, no matter what people try to tell you. You're not going to catch it again. Yes, there's a case in England that's just like with the chicken pox, right? If you get it, you don't get it again, but there's a few people that get it again. But with all the people that have it, I mean, it's probably 0.00001% that actually get it again. But you're going to hear that story because that's a great story to tell, right? That's a great story to tell in the media. You want to scare the shit out of people. This way people are clicking, and that's how they make a fortune, right? They want to scare the crap out of you. They don't want to report to you how everything's okay now and you're good. No, it doesn't work. You don't make money by doing that. But when I question masks on social media, holy cow, people just wanted to kill me. Trash the crap out of me. Frank, you're an idiot. You don't know nothing. And it's not because they had facts. It was because they were conditioned by the media to believe that you're basically going to die if you don't wear a mask or distance yourself 6 feet apart. In Florida, it was never that extreme, but in New York and California, it was. I mean, people will beat the shit out of you if you walk down the street. If you walk into a store without a mask, they'll kill you. They go, what are you, crazy? Oh, my God, you're going to die. Relax. 99.5% survival rate. You're going to be okay. And these are like 35, 40-year-old people who this disease really doesn't impact them that much. And they're going to be okay. It's like a mild flu to them. But it's funny on social media, right? I could post something that about a stock, provide original analysis to social media channels, say this is going to, and I get like a few responses, like just, great analysis on something really quick. This is something you should be looking at. I get a few responses. If I talk about COVID, where I had great knowledge of this disease, talking to numerous doctors, interviewing people in quarantine zones in China and Italy on this podcast, warning you to get out of the market ahead of time, understanding this disease very, very early on because of the context that I have. Just lucky to have before we locked down the U.S., but nobody cared. They just, hey, we watch TV, we watch this channel, and this is the way it is. They wanted to believe what they wanted to believe, or what they're being told. At the end of the day, it's what you read and what you're being told, right? So you find the information that's happening all around the world. How do you find it? You go on the internet and you read a story, or somebody tells you about it, and you're assuming that that's the truth, but I don't know. Now, March through May, Dr. Fauci became a superstar. Took center stage, talking about how you didn't need to worry about COVID in January and February, saying that we don't need to lock down or wear masks. We're not going to need that. And then totally flipped, saying that masks are needed. And this disease is very dangerous. That's perfectly fine. I have no problem with that. I like people who change their mind when the data changes. We see it in the market all the time with perma-bears who continue to tell you to sell all stocks over the past 7 years. The market's going to crash, even though the Fed mandated low interest rates forever. And the Fed pumped nonstop stimulus into the markets. Now we're talking trillions and trillions and trillions, and more is coming, even after this 1.9 trillion. But you never change your thesis, even though the facts change. But then something interesting happened. We saw numerous doctors. A lot of these people were dying to be celebrities, love the celebrity status. I've seen this happen to people in my industry when they become TV personalities. Holy shit. It's like you don't even know the person. It's totally different. It really messes with you. It really does. You have to look good all the time. You wake up out of bed, you're going to look good. You have to look good. Everybody's watching you. That's all you care about. It changes your life. It really does. When you have that kind of, just, a lot of my friends in the industry just became really different the more bigger they got, especially when they were on TV. Doctors, I guess everyone would be the same way, right? Everybody wants to be on TV. A lot of people want to be on TV and be famous. They don't know what to be famous for. They just say, I want to be famous because they're on TV. But we saw this among doctors. They went on TV to promote mask wearing, social distancing. Some of these doctors also suggested that we close schools immediately. This was based on science, they said, even though there was zero science that told us we needed to close schools immediately. We just closed them because we were scared. And saw this, but this is like in May, right? So we started at March, at the end of March, a lot of schools closed. And then to April, we started getting the data, May getting the data, and they're like, we got to stay closed. We got to stay closed. And the data showed that this doesn't impact kids. It's not spread too much through kids. Now, around this time, in May, numerous doctors began to email me from my network. I never realized how many doctors listen to my show. I do understand doctors and stocks go together, like, unbelievably, which is really, really cool. Risk takers. But I have a lot of doctors that listen to me. I didn't know. And they started reaching out to me. They were telling me how they were being suppressed, how they couldn't talk publicly about COVID or express their true feelings as people who are in the field treating patients. Think about that for a minute. Think about that. COVID, a brand new virus, very little about. Yet we're not letting doctors who are in the field treating patients, trying new things to help them, right? This is a stage where we're just learning. But they won't let them speak out. Why is that? If you look at the goal of science, is to question everything and then test everything and then let the data do the talking. The data do the talking, not opinion, data. That's how we figure out problems, how we save lives. There's no ego involved, just data in hopes of making the world a safer place for the next generation and the one after that. But that wasn't the case here. It's masks 6 feet apart, or you're going to be banned from every social media site if you disagree with that mandate. And you may actually lose your job if you're a doctor and you say that. Especially if you speak out publicly on public platforms. Don't do it. Don't speak out against status quo. This is the mandate. That's it. Don't question it. Don't try to figure it out. We weren't allowed to voice our opinion in a free country that has free speech. Couldn't do it. So what does that leave your informational, right? Where do you get your informational providers? Where are you getting it from? It's the media. They shut everybody off, close everybody off, and the media was telling you basically a fear for your life because you have a risk of dying if you get COVID, which is in their best benefit. Again, no data available in May showing anything about masks working, 6 feet apart working. There was data available showing that 98% of people under 50 years old survived this disease, and that number is much higher today than 98%. More people getting tested, getting more data. But again, they told everyone to stay home, wear masks. All stores except the ones our government selected, the Walmarts, Targets, Home Depots, CVS's, supermarkets, all the stores had to close. So, too bad. Even if you provide the same services as Walmart or Target or whatever, gotta close. Forced to close. And be sure to stay 6 feet away from everyone if you go out. In fact, stores that were allowed to stay open, they needed to put stickers on the floor to make sure people abide by these rules. Like we're all effing idiots and we don't know how far 6 feet's apart. No, stand here. Stand here. There's a big sticker there. You're not standing on the sticker. Stand here. These stickers are still there today. Are you kidding me? This way we all know exactly how far 6 feet is. Let's fast forward to today. So the Journal of Clinical Infectious Diseases, this came out a couple days ago, published a report showing that there is zero statistical difference between staying 6 feet away compared to staying 3 feet away. Now, Dr. Fauci was questioned on this a couple days ago and said, yeah, you know what? I'm aware of the data, and the CDC will be conducting its own tests on this. The CDC will be conducting its own tests on this. Why was Fauci not running these tests himself? I mean, I know you're really busy going on TV, being on the front cover of magazines and stuff like that, but why? Why weren't you running this test or instructing the CDC to run these tests yourself? Aren't we? I mean, we're still learning about this disease. We really don't know how it's transmitted. We really don't know, why it spread so fast during certain times and other times. We really don't know that much about it. And plus, China, where it came from, is not giving us any information. They told the World Health Organization, you cannot come into Wuhan. And then during that time, the World Health Organization said, we want to commend China for doing such a great job. They had no freaking idea what China's doing. China didn't let any scientists in there to study this. Why is that? You guys come up with your own opinion on that. Blaming everybody else, like they always do. But getting back to Fauci and CDC, that's a pretty big deal. Why aren't you running tests 6 feet to 3 feet? You may be saying, Frank, big effing deal, 6 feet to 3 feet. What's the difference? Ask a restaurant that question. Ask a gym that question. Ask kids in school that question. Ask anyone that has limited the amount of people in their stores or businesses over the past 3 to 6 months. And I say 3 to 6 months, depending on where you live. 6 months ago, Texas, Florida opening up. New York, California still have major lockdowns in place, even though there's numerous data now showing that, hey, open up. You already destroyed those, a lot of these cities. Now you're going to open up. But that's a huge deal. And why are we only knowing about that right now? Especially considering that the doctors told us this science was the reason behind the 6 foot of social distancing. It wasn't science. It was an educated guess. It's a big difference. And you know what? You were wrong. You told us it was science, even though there was no real science behind it. Gets better. Another new study. This is from this week as well. By the Medical Center in Massachusetts says that after surveying 251 school districts, there is zero difference between the number of COVID cases among students or staff between those observing 3 feet and 6 feet rules on wearing masks. So more and more studies are coming out on this. Again, why now? They also say the same institution also said that its studies show that COVID transmission rates are low in schools. This came out last week. No kidding. Really. Thank you. Thank you for that. Medical Center, Massachusetts. Thank you so much. With all those studies showing that COVID transmission rates are low in schools. Really? Because that was data we had in May. Schools should have been opening up. But you're just reporting that this week? After millions of children, tens of millions of children forced them in school for an entire year? And shit, schools are still closed in California. Why? 100% political. Not data, not science. No. But good job. Thanks for putting those kids first, destroying their lives. Way to go. Way to go, California. And by the way, interesting data for you from California. And this is from this week. This week. You know how many kids under 17 died of COVID in California? And we're over 1 year now with COVID in the U.S. 14, which is too many. And it's sad that any child should die from this disease, but 14. But we need to put this in perspective because they're closed. Schools are still closed there, right? 14. There are over 9 million kids under the age of 17 in California. So that puts a death rate from COVID at 0.000144%. So the flu is much, much, much more dangerous than COVID when it comes to kids under 17 years old. But schools in California are still closed. Again, who cares? It's data. Nobody cares about the data, right? It's the data. It's a science. Nobody has data. This is data. This is actual data. Again, you don't get pissed at me. Get pissed at the people providing these stats. If you think they're lying, go to the CDC. Don't get pissed at me. I'm just repeating and doing my research here. Now, another scientist has come out against lockdowns. This is a few months ago, saying that lockdowns will be remembered as the biggest public health mistake we ever made. The harm to people is catastrophic. And this person is Stanford professor Jay Bhattacharya. I probably destroyed that name. Who is part of something called Great Barrington Declaration. Stay with me here. So this is an initiative written by 3 public health experts months ago. They're from Harvard, Stanford, and Oxford, encouraging governments to lift lockdown restrictions on young and healthy people while focusing protection measures on the elderly. Makes sense. Doesn't that make so much sense based on the data? Protect the elderly who die from this disease or contracted. That's where most of the deaths came from. And let the young and healthy people get out there. Because this is not that bad for them, based on all the statistics that we have. World statistics, not just in the U.S. Now, the Great Barrington Declaration, I know, stupid name, I don't know, but it has received over 13,000 endorsements, those are signatures, from medical and public health scientists and more than 41,000 medical practitioners. You know what? That's a lot of medical experts. And this isn't some crazy person or a cult and a big idea and some guy goes on TV and shouts and says, no mask wearing, no this. I mean, 41,000 medical practitioners, 13,000 endorsements from medical and public health scientists. I don't even know how many public health scientists are there and that percentage of that. Saying that lockdowns are really, really bad. But don't worry. Don't worry. The science is telling us we need to stay home. Now, across most states, COVID deaths, hospitalizations, cases are down 85 to 90% across the board. This includes states like Texas and Florida who did not have strict lockdowns. Remarkable. I'm not saying that they should be going out spring break like they are and going crazy and partying and going nuts. But we did a good job here wearing masks, but keeping the economy open so people could live. I mean, you compare that to New York, California, some of these major cities, and it's sad. It's sad that they close people. I don't care if you're Democrat or Republican. You work. This country is about working. This country is about taking care of your family. It gives you the opportunity. And you're telling people, no, you cannot do that. You cannot work. And you're basing that decision not on data and science, but mostly for political reasons. It's not just fewer lockdowns when you look at Texas and Florida. And it's no coincidence these states are seeing massive inflows of new people flocking from those high-tax states like California and New York. But if you look at the whole picture and what they're doing now, they're actually raising taxes. New York said, we're raising taxes on people making $1 million or more. It's pretty smart. It's a good idea to raise taxes right now. What are they going to do? They're going to move. Florida, Texas, they're moving. They're leaving. It's going to result in much lower tax revenue, which that means taxes will be raised on the middle class. They have to pay the bills, right? It's pretty simple. It's economics 101, very easy to see. So the politicians running these states that are raising taxes while keeping those lockdown measures in place, I would like to say that they're complete idiots, but they're not. They're doing this intentionally. It gives them more power. Why else would they be doing it? Why now would Cuomo come out and say, oh, well, New York has to open. There's not going to be another New York. Really? Because that's kind of what DeSantis said in Florida. It's kind of what the governor said in Texas 5-6 months ago. Why are you saying it now when people are leaving in droves? I want to share some statistics, data with you that nobody in the media is reporting. Why? I'm not sure. Maybe you can answer the question for me. Because all I'm seeing being reported is how Biden said, and this is his first appearance as becoming president over 4 months ago. You'd think when you become president, you'd be out there, go, I'm the president. This is exactly what we're going to. No, disappeared. Go hide. Nowhere. It's fine. Way to get out there, bud, as soon as you become president. But everything's been, he makes a pitch. He says, if we do all wear our masks, right? So if we all wear our masks, continue to get vaccinated, if we do our part, if we do this together, by July 4th, there's a good chance you, your families, and friends will be able to get together in your backyard or in your neighborhood and have a cookout and a barbecue and celebrate Independence Day. And he goes on to say it doesn't mean large events with lots of people together, but it does mean small groups will be able to get together. Right. So you may be able to spend July 4th, the date America became an independent nation, free nation. You may be able to have a barbecue with a few members outside and spend, and this is outside, spend time with them outdoors, not even indoors. You may be able to do that, but still no parades, barbecues, carnivals, fairs, picnics, concerts, baseball games, family reunions. Nope, none of that still, even though we have data showing that that's crazy. But you may be able to eat a hot dog with a few members of your family outside 4 freaking months from now. If you follow my rules. If you follow my rules. What are your rules based on? I'm curious. Because now people are starting to smarten up. And again, it's not politics. People are not working because of these mandates. And it's insane when you're looking at the data, when cases are crashing. So just follow me because I said so. That's the way it is. Well, let's have some fun. Actually look at data, the science. And all these are easy numbers. I'm not getting analytical, anything like that on you. I promise. It's very simple, very easy. So I don't want to lose you. So as of March 16th, yesterday, the U.S. reported 40,400 cases, new cases of COVID, 589 deaths, and 35,200 current hospitalizations. Compared to a week ago, they're all down. They've been down on a weekly basis tremendously. Most states have seen these numbers fall by 80% to more than 90% from their peaks, which is awesome. That's what we wanted, right? That's what we needed to see. So now when it comes to vaccinations, we're seeing the rollout. The media is reporting that 21% of the population has taken at least one dose. You'll see that everywhere. And it says, while 11.5% have taken both. And that's data from this week, the latest available. That's pretty good. It's encouraging. But let's dig into those numbers a little further, because I'm surprised this isn't being reported. So the media, when they post those stats, are using the total population, which includes 18-year-old kids and under. Even though there's zero reason for these kids to take the vaccine, and studies haven't been performed on children with vaccines yet, so we're saying, okay, they're going through process now, because it's not priority, because most kids are perfectly fine. They're not at risk of dying from COVID compared to older people. So if we exclude the 18 and younger part of the population, if we exclude them, close to 30% of the population, again, the population is over 18 years old, has gotten one dose already, while 15% received 2 doses. It's incredible numbers, but it gets even better. We all know who gets impacted the most from COVID. These are people over 65 years old. Now, when we separate that demographic, the 65-year-old and up in the United States, separate from the rest of the population, 64% of these people who are over 65 have received one dose, while 36% have already received both doses. That is an incredible statistic. Why? Because we were told by scientists that 70% of the population needs to be immune before we achieve herd immunity or needs to get that vaccine. Now, when it comes to people over 65 years old, almost 70% already got one dose. And you're going to get the next dose in 30 days. It's actually 28 days. That's 28 days later is when you get the next. So we're looking at next month, we're going to have pretty close to 70% of our older population and people over 65 have the biggest risk of dying from COVID will achieve herd immunity. Shouldn't that be everywhere? An incredible achievement? Celebrated? Should be a biggest headline in every major newspaper, media site? No way. Nope. Absolutely not. We're just going to report that 21% of the population has taken at least one dose, while 11.5% have taken both. Those are the only numbers you see. And these numbers are all available on a CDC website. But it's not being mentioned in the media anywhere. Why not? Based on these numbers that are on a CDC site right now, why would Biden say that in a few months, close to 4 months, you'll be able to have a small outdoor gathering, maybe a barbecue, outdoors? Again, 4 months, why would he say that based on this data? I mean, if you're looking at it, again, 80% of the people who are most risk of dying from COVID will be fully vaccinated. And the reason that number is not going to be close to 90, 95% is because some people don't want to take the vaccine in that age group. That's their choice. That's fine. You have your own choice. It's America. If you want to take it, take it. I would advise you to take it if you're over 65 because you're at risk of this. And most people over 65 have an underlying condition. And those that don't, good for you. It's hard to stay healthy. Man. Now, why is this relevant to an investment podcast? Probably what you're asking. So if you subscribe to any of my services, you know I always provide the risks and rewards of each investment. So in short, is the risk that you're taking enough to justify the potential reward? You look at both sides of the equation. I would love to tell you that every one of my investments is going to go higher at least by 100%, 12, 24 months, and I'm always right. Always. I'd love to tell you that. I'm right more times than I'm not. Otherwise, I'd have a different job. That's why I have a lot of subscribers. But I always look at the risks. That's my job. The risks of picking this stock and how much will we lose if I'm wrong. And there's tons of data analysis that goes into that decision. But in the end, there's always a trade-off. So if I'm right on this, the stock is probably going to go up more than 100% in 24 to 36 months. But if I'm wrong, we'll lose 25% because I play stops. Or maybe 35% for smaller names, a little bit more volatile and have much more upside. But there's always trade-offs. There's trade-offs. It's not just buy this, it's going to go higher. Yeah, no. Now, when it comes to our government and all the scientists that provide data analysis to our president, to both presidents, to Trump when he was president and to Biden, was there not one that looked at the risks of locking down the economy and what would happen to us? What would happen? Mask wearing, social distancing, how that could actually hurt people? Because I didn't see any analysis on that pretty much the whole entire time until like this week, past couple of weeks. The only analysis I saw was based on opinion and how to stop the spread of COVID and why we need to focus on this. It's interesting that we're a year in, guys, over a year in. Because new data is coming out every day, every week, showing what lockdowns have done to our children, to our parents, to our society. Like data from the CDC showing between April and October 2020, hospital emergency departments saw a rise in the share of total visits that were from kids for mental needs. From the Riley Hospital of Children in Indianapolis, showing a 250% increase in the amount of children and teen suicide attempts in 2020. Why weren't we looking at the risks of locking everything down and keeping everyone home and closing schools? Nobody did analysis on this? Why? Why didn't you get economists involved? Why didn't you get doctors involved? Really? Why? How researchers with the National Commission on COVID-19 and Criminal Justice saw a 30% rise in homicide rates in the largest cities in America, which include rising homicide rates in 29 of the 34 largest cities. Locked down, but let certain people out. And yeah, crime's going to increase. Why? Because there's no cops on the streets because you're defunding police. From the USCF Benioff Children's Hospital in Oakland, with suicide rates among kids more than doubled in the fall of 2020 compared to the fall of 2019. The London School of Hygiene and Tropical Medicine reviewed 65 studies from around the world involving 97,000 healthcare workers. We're talking about healthcare workers here, right? This is, first response people who care, they risk their lives every day. They found that 1 in 5, to be exact, 22%, have experienced depression, anxiety, or PTSD during the ongoing COVID-19 pandemic. It makes sense, right? With everything that they saw and how stressful it is and how crazy it is and hospitals got overcrowded, emergency rooms got overcrowded. It makes sense, right? The anxiety, seeing people die. And this compares to around 4.4% of the entire world population that experience anxiety disorders. But just in healthcare workers alone, it was 22%. Yet NBC, who gathered data on ranges of children welfare metrics, this is recently, said emergency rooms have seen a 24% increase in mental health-related visits from children's ages 5 to 11 compared to last year. Food banks have been slammed with hungry families, as an estimated 17 million children, many largely cut off from free school lunches, are now in danger of not having enough to eat. That's an increase of more than 6 million hungry children compared to pre-COVID. More and more of these tests are coming out. National Testing Organization reported the average student grades 3 to 8 who took a math assessment this fall scored 5 to 10 percentile points behind students who took the same test last year, with Black, Hispanic, poor students falling even further behind. An estimated 3 million vulnerable students who are homeless and foster care, have disabilities, or are learning English appear to not be in school at all. We're talking, guys, tens of millions of kids, our future generations, the future of America. You closed schools, even though you had data available. And look what's happening. What are the consequences of nobody looked at the other side of the equation? You're not going to stop every single death from COVID. Absolutely not. You can. That's what politicians would tell you. We're going to eradicate. It's going to be gone. No, it's not. We want to try to prevent as many deaths as possible, to get the vaccine to as many people as possible, to lower the risk as much as possible. But we have to make sure that the rest of the world, 99.5% who survived this, and 98% who are really not at risk of dying at all, need to live their lives. Kids need to go to school. People need to go to work. When it comes to kids, I'm seeing the same thing with my oldest daughter, who's really behind. And schools opened up pretty quickly in Florida. But I'm helping to get him back up to par, studying with almost every day. So he had trouble with math and reading. Because most of this is online in terms of the homework assignments and tests taken on the computer. A lot of this stuff doesn't get inputted. It gets lost. Homework assignments, teachers forget to put the data in. So it's not everything is automated. But there's still, to this day, and my kids have been in school since May, lots of confusion. Lots of confusion. And I got to tell you, parents from New York and California, with some schools that just open it up with only, what? They want to open up with 1 or 2 months left in school year. They're going to open up. There's going to be a steep learning curve for the teachers, definitely for the students, and definitely for you as parents. And it takes months and months to get used to. Even though your kids are going back to school and you're celebrating, it's going to be months before they can really focus on the actual math, the reading, because you have to learn different computer systems, different software systems. Even if you're going to the same school and you have 7, 8, 9 classes, whatever how many classes you have, hey, we're using 3 different programs for each of my kids. Not just everyone uses one program and no, you got to go different places, and it's crazy. And the teachers are confused. You try learning a new software program in a month. It's impossible. I mean, I'm doing this on Vimeo. It took me 6, 9 months to really get good and, doing all the taping and stuff like that and video. It takes a long time to learn any software program. So expect that. If you're in New York, California, good luck. If you're back to school, it's months before you really get to understand this system, and especially your kids, before they really start learning stuff again. But again, I asked a question. Why have our scientists, so-called experts, scholars, largest teaching institutions, why have they not run studies on the effect of lockdowns, the effects of social distancing? Why didn't they do this in May, June, July, August? Why? Because the cure for this virus and to stop spreading has now become worse than COVID itself. There's lots of responsibility to go around here. Which, of course, that one politician, statistician, scientist will admit, no way, never admit to being wrong if you're a political figure. It's not allowed. It's not the American way anymore. It's no mistakes. I'm always right. I'm arrogant, which is so effing sad. That's what we see. We saw it from Trump. We saw it from Biden. We see it from everybody. They never say that they're wrong, ever. Trump said numerous times, this isn't a big deal. It's going to be fine. It's going to be fine. It's going to be fine. It's bullshit. You should have known. Biden saying, it's all Trump's fault. It's that you killed Trump, right? You made fun of Trump when he closed the borders in January. You made fun of him, which means this would have spread a lot faster. Biden would never admit that. Those are all facts. Again, the political spectrum across all of it. I don't care if you're a Democrat. I don't care if you're Republican. But I know you care about your family and your kids and working. And that's what these politicians are controlling right now. So as an investor, how do you look at this? This country is going to open up a lot faster than anyone thinks. They can't stop it no more. Airlines are going to be booked for months out. There'll be no hotel rooms available for months out. Rent-a-car companies will thrive. Travel-related companies still have loads of upside potential. Something that everyone who is a subscriber to any of my products should be benefiting a ton from, since we were early to this party. Looking at the Russell 2000, many of those travel-related stocks are smaller names than the Russell 2000. It's up 20% this year. It's almost 4 times what the NASDAQ is up. This year, 20%. Only March 17th. I don't suggest buying the major cruise lines here, whose enterprise values are all higher right now than pre-COVID levels due to the massive capital raises they have over the past month, because they still have no cruise in operation, and they just suspended those cruises for a couple more months. It's pretty crazy. You have a high valuation with no cruises with no ships, right, in operation than pre-COVID when all these ships were in operation. Getting a little ahead of yourself. You got to be careful. But you look at Vegas, starting to boom. It's based on recent reports. Open up 50%. MGM said they're opening up more than that. Avis Rent-A-Car bought this a while ago when Hertz went under. These guys were great. They did a great job deleveraging. Up big on it, but I still see more upside. Expedia's another name we're up a lot on, where earnings are going to explode higher in the months and years ahead. Huge demand. You may ask, why are profits going to explode? Well, for one reason, talk about profits here. These companies cut costs dramatically during COVID. They cut salaries. So what happens when business goes back to normal and starts surging? It results in an explosion in earnings. Trust me, I've been analyzing it for 25 years. The best companies to buy are those that have had problems and they cut costs and they restructure. And once they get that restructuring, their costs are so low. And once they find out, hey, these are the divisions that are working, this is what we're going to focus on, that's when you see the stock explode. 5x, 10x, 20x. That's how you make the biggest gains. And that's what we're seeing. And it's just the beginning. Another reason why they're going to explode is the recent stimulus bill of $1.9 trillion just passed. So $1,400 checks for everyone. Here you go. Handing out money, trillions. It's going to result in the U.S. personal savings rate surging to around 18%. What does that mean? That's 11% higher than normal. So if you want to put numbers on this, that's close to $2 trillion consumers will have to spend on whatever they want after they get these checks. $2 trillion combined with all the other stimulus plans. And you know as well as I do, everyone in this country is dying for a vacation. They're dying to go out. They're going to start spending money like crazy well through the summer, likely through 2021, because they're dying to go out. They've been locked up. They've been in with their kids. So while our government refuses to report facts, continues to give us mandates based on zero data or scientific proof, you can do two things. You can bitch about it all you want to your friends and family, which I know a lot of people on the left are going to be sending me emails about this intro. Right, you know what you're talking about. Again, go to CDC. Don't yell at me. Look at the stats. It's fine. Again, you can bitch all about it. That's fine. I don't care. Or you could choose to position your portfolio to maximize your returns and be incredibly wealthy, which is why anyone who owns assets is making a fortune right now. Again, you could do this by buying the reopen trade. I mean, subscribers have been doing since September, October. Shared a few names with you just recently. I would include airlines in there, which are 52-week highs, but still down 20, 25% from all-time highs. Buy cyclical names. Cyclical names do better when the economy recovers and come down when the economy's not doing it. We're going to see an explosion in the economy. It's likely going to grow north of 7% this year, which will mark the first time, and I believe, in over 40 years that our economy grew faster than China's. Again, we had COVID, stuff like that, but still, pretty remarkable. Developed nation growing, the biggest nation, 6%. I know how bad it was. Believe me, I know. The economy was crap last year, but this year, different story. Cyclical names, that's banks, consumer discretionary names that lag the overall market because some of these names are up enormously from their March lows. Some restaurant names and retailers and things like that. But there's a lot that have lagged. And when everything opens up, these guys are going to see an explosion in earnings, an explosion in demand. And again, they cut costs significantly. And also, you can do this by buying infrastructure companies, where Goldman Sachs just published a report yesterday. This is after the $1.9 trillion bill just passed. So they published a report, and already they're on to the next one. The next report, suggesting the next stimulus package, which will only need 51% approval from the Senate, not more than that, which they have, right? Dems control of, everything. But this could be as much as $4 trillion, the next stimulus bill, of which $2 trillion will be infrastructure related. And the other $2 trillion, as well as I do, is going to be filled with pork. Nonsense that we saw with the $1.9 trillion COVID package, where I think 85% of it was non-COVID, right? That's what they were fighting about. Who gets their payouts? These politicians. That's all it was. It has nothing to do with helping the people that you forced to close their businesses, which you did, because now with these trillions of dollars being passed, you get to, sit there with the bag opened up and just that money filtering in for every one of the politicians. That's how they played it. And they played you, and they played me. By all the bullshit stats that they reported, and all saying that science and the data was all bullshit. all of it. But to call them on that bullshit, position yourself right in your portfolio. I saw Steve Leisman get on TV today, and he goes, wow, the 30-year is all the way up to 1.6%. But it's amazing that we're not seeing inflation. Really, Steve? Come on, man. Really? We're not seeing inflation? I know we're not seeing inflation from the CPI, and that's all that matters from the Fed because they're going to keep interest rates low. I get it. But we're not seeing inflation? Have you seen lumber prices? Adding $24,000 to the price of a new home? Which is what? Like $325,000, which, the average home price goes up around 2%, 3% every year. Lumber prices are accounting for 7%, an increase in home prices alone. No inflation there. Copper, no inflation there. No, I don't see it. Gasoline prices, no, I don't see it. No, gasoline prices at the pump, no. No inflation. Food prices, no. Where's the inflation? Steve, get out there. Stop looking at your freaking charts in a dark room, man. Come on, you're on CNBC. People want to hear from you. Understand what the people are going through. I get it from the point of view where I'm the same way, saying, listen, it doesn't matter what we think about inflation because it's all the CPI is all that matters. But come on, don't say where is the inflation on TV. Are you kidding me? You're basically calling everyone who pays bills a fucking idiot. Do better than that. And I like Steve. Anyway, we're going to talk more about that in a second. Bringing in Daniel Creech. We're going to listen to this opening in person before giving him a chance to reply and speak. But Daniel's a senior research analyst at Curzio Research and a weekly fixture now on Wall Street Unplugged, where we break down top stories of the week and how to profit from them. So, Daniel, what's going on?
Hey, Frank, what's happening? Happy St. Patty's Day.
I know.
Happy Wednesday to everybody. This is always a good day, and this week it's a little bit extra, so that's cool.
No, I know. Thank you for the happy St. Patrick's Day and everybody out there. And a lot of news this week, right? I mean, you heard me talk about COVID. I know you helped to even provide a lot of the stats and the data and stuff like that on it, which was really cool. And just going over like how the science and the data and how we're being told different things. But, I won't beat that to death because, again, I might beat it to death already. But I did want to talk about some of the things that I meant where Goldman just came out with the infrastructure bill saying that it could be $4 trillion and $2 trillion of that is infrastructure. And they're going to use budget reconciliation, which means they're only going to need 51 votes, which they have in order to pass this. And he believes, Goldman believes that's going to happen next year. So we're already talking, we just passed 1.9 trillion. We're already talking about the next one. I mean, pretty crazy, right?
Yeah. I mean, that's the Gunlock bond manager that we've talked about often had a great saying, it's expected now. People are going to expect stimulus as a permanent thing. And the market is going to continue to expect more infrastructures or other bills, and infrastructure is going to be the next one. The interesting thing that's going to pop out is once negotiations start and headlines start coming around, is the spending is going to be a lot less impactful in the short term than the recent coronavirus bill. Frank, I'd like your thoughts on that, because if they pass $4 trillion, obviously they can't spend it all in the first year. It's going to be spread out. And the reaction of the market, depending on what's in there in the early years, is going to give investors, I think, a real good heads up. So infrastructure is obviously on there, some green energy, ESG, the environmental, social, geopolitical, or governance, or whatever the hell the G stands for in that. But that's what really jumped out at me is the spending and the size.
Yeah, the spending and the size. I'm going through the Goldman report too, guys. We have access to things like this, just showing it to you. I thought the report was interesting. I mean, you're looking at the amount of spending, and they're saying that it could be offset a little bit, though. They had a couple of things they were saying, which I thought were interesting. President State decided to enact bipartisan legislation, and the likely resistance among centrist Democrats to immediately pursuing legislation via reconciliation process, which only requires 51 votes in the Senate. It's a big deal, right? Because we're looking for infrastructure bill from Clinton and also from Hillary Clinton and Donald Trump. They both ran on $1 trillion infrastructure bill.
Yep.
But Trump got elected, and nothing freaking happened. Nothing. They couldn't decide it because they didn't want, whatever. And it wouldn't have worked either with Hillary. But they both wanted $1 trillion. Maybe you tweak it a little bit. So it's there, but now it doesn't matter. It doesn't matter. Because if they do reconciliation, it's 51 votes, and they have that in the Senate. So they go on to say that September be the deadline for the infrastructure bill, though it could pass earlier. So we're not looking at that long, but into 2021, they're saying it's going to be phased out. Like, most projects are phased out where they don't say, you're getting, $20 billion right off the bat in 1 year. Here you go. Where it's like it's $20 billion for a 10, 15-year contract. But again, that's going to result in more money coming into the system. And it's going to be interesting because they say $2 trillion is for infrastructure and $2 trillion is going to be for whatever, which is going to be funny, education or whatever it is. I don't even know, actually.
Well, there's going to be plenty of pork, no doubt. I mean, you know that.
Yeah, of course.
what's wild is some of the offsets and the way they're going to pay for it with the tax hike and things like that. So what people really need to pay attention to is and I've joked about this, but this is one of the best cliches. When people tell you who they are, listen. And when you know tax increases are going to be kicked around and coming down the pike, you want to look at companies that have pricing power, because if the corporate rate goes from 21 to 28, okay, math's funny. Don't think 6%. That's 33% increase. Okay, that's a huge jump. If you don't think corporations are going to pass that on to customers, I agree to disagree. And that's going to go through the prices of oil and lumber. Did you see Lennar's housing earnings last night?
Yep.
They're amazing. They're going to do an average $400,000 house, and they're going to do 60-some houses, I think, this year.
Yeah.
And demand's through the roof.
Yeah.
So lumber prices are going to continue to go up, oil, and your prices at, I know you love this, they don't include them, but when you factor in grocery prices and things like that, that's what you want to look for as an investor, getting ahead of that.
Yeah, no, definitely. And just a little bit more into this Goldman report, they're just talking about, however, large numbers are not comparable to the bill Congress just passed for several reasons. Most of these policies will cover several years, and some could be even permanent, but again, over 7 years, which is fine. They said, second, the headline price of an infrastructure package is likely to count some ongoing spending. For example, last year's $1.5 trillion House passed infrastructure bill counted nearly $500 billion of highway transit spending towards. But then they go and say, and this is a wild card here. We all know taxes are going to be raised; they have to be raised. But they say, third, some of the spending is likely to be offset by tax increases and other spending cuts. And they talk about, expect an increase in the corporate tax rate, which they ran on, which is fine. Biden ran on, we get it, and increase in the capital gains rate, which a lot of people are hoping that doesn't happen. You're looking at big risks to this market here. I mean, yes, we're getting more stimulus, but taxes have to be raised. We have an enormous amount of debt. And then, Daniel, we're going to go to, a big risk, which is interest rates, which we saw, right? The 10-year now closing at 1.7%. I don't know if we're there right now that I'm looking at this, which is, around noon today, Wednesday. But it's, we're seeing rates rise, and it is hurting the markets again, and it's a significant risk. But, what are your thoughts on it? Because we did have Wells Fargo come out with a report from today saying that it's going to hit 2.2% this year, and it's going to happen right away.
That's massive.
That's not factored into the stocks. That's not factored into stocks right now. And not only that, they said it's going to be over 3% next year. Again, not factored into stocks. And the amount of debt we have to control that rate.
Yep.
And it's really saying that, hey, you know what? It's saying we're expecting inflation. That's what that rate is saying, and It's crazy, right? I mean, but that's a big risk to the market.
Yeah, I mean, the market is always right. The reason it's upset about, or we'll see how it reacts to taxes and things like that, price hikes. One more point on that, and the reason for everybody out there that's kind of rolling their eyes or thinking, oh, it's only on the rich, the reason you ought to fight back as individuals and investors on higher taxes, because the economy is the most important thing, and it never stops. The cutoff. You're only raising taxes at 400,000 or $1 million or $2 million. That number is a one-way number, and it's always going to go down and get closer to the masses. It has to. So that's my last rant on taxes. That's why you should be fearful of that. Interest rates, the FOMC, the Federal Reserve, is meeting today. They're going to do Jerome Powell. This is why we need a soundboard, Frank. I need the Willy Wonka theme song playing while we're doing this. Okay, I want Oompa Loompas. They're St. Patty's Day. They wear green. Anyway, we could have a lot of fun with that. But it'll be interesting to see if he lets the market kind of sell off. It's the Jerome Powell temper tantrum, and it'll be interesting to also see what Secretary Treasury Yellen says afterwards, because there's going to be comments out of the White House. So
yeah, no, definitely, but it will be an interesting meeting. I mean, I'm not expecting any surprises other than maybe obviously they're going to say that they're going to raise the inflation target from 2%, which is kind of like 2%. And they're saying well, it's not 2%. I mean, they're going to go to 3% or higher because that's what you're going to see. But
you really think? What do you think? I don't think there's any way they let it get to 2.25. I don't think I think they'll have to announce something before that, because if the 10-year goes there, the market's. I mean, I would bet the market's got to have to sharply pull back.
It should, because that's the thing. I mean, debt is never a concern. We talked about debt, and I brought this up, I believe, in the past podcast, but debt is not a concern. People have been citing debt as a reason for the market to crash, the world to end, the dollar to disappear since the 60s, 70s, 80s, 90s, all the way up, and we're at all-time highs. And sometimes it came where there was a lot of leverage, and we need to correct itself. In 2008, we got bailed out, and again, with the pandemic and stuff like that. But debt is only a problem when you can't pay it. And right now, with interest rates low, it promotes risk. It promotes you to take out more leverage. This rate going higher with the amount of debt that we have, Holy shit. That is not factored into stocks. And I'm telling you, that is the biggest risk by far that can crush the markets. Now, the good news for you is the Fed knows this. They see it coming. It's not like the pandemic. They had no clue. I was reading research reports and breaking them down. I remember in February into early March and saying these guys are crazy. Goldman was like, it's going to be a V-shaped recovery. Next quarter's going to grow. I was like, these guys have no clue what's coming down pipe with COVID. They have no idea. So when the Fed sees this risk, and like 2008, they didn't see the massive leverage behind everything, right? The housing crisis, they didn't really understand. They didn't understand it into mid 2008, where everything was, AIG was involved and all that crap, and everybody got, just filtered through to basically every financial institution. But the Fed sees this. So what could they do is yield curve control, which they did in World War II, which basically caps rates, long-term rates. So now they cap long-term rates and they control short-term rates. If they announce yield curve control, whenever they announce it, because if we go to 2.5%, I'm telling you, just say we're very far away from that, but as quick as it just moved, it is pretty impressive from 1 to 1.7. If it goes to 2.5, we're going to see the market come down a lot. We'll see the market sell off by at least 10%. If the Fed comes out and announces yield curve control, stocks are going to pop by 20% plus. Everything is going to take off. You're going to see massive leverage. Even
with everybody expecting it? I wonder, I don't think he's going to do it today.
They're not. Most people, the bond market, a little bit you could say is expecting it, but it's just the timing of it. When are they going to do it? Because now that takes a major, the biggest risk in the market off the table, and it just promotes risk. And you're going to see all risk assets, especially cyclical names, really, really surge. Everybody has money now, right? I know that there's a big discrepancy and the wealth gap is wider than it's ever been for people who don't own assets compared to people that do. I get it, but they're handing checks to a lot of these people, just handing them checks, and they're also, through unemployment. And now that they're opening up, these people are getting their jobs back. They should. The restaurants are going to hire again. The bars are going to hire again. A lot of companies are going to hire again, and bring these employees back with Disney and stuff like that. You will see an absolute explosion if they announce yield curve control, because that is the biggest risk that's on the table right now. And they will announce that if we surge at 2.5 and approach 3%, because they have to. Yeah, they have to, because
they're going to have to do something. Exactly, they're going to have to do something. I'm with you. Studying that, it was really interesting. I'm still nervously bullish because there's so much liquidity and so much free money and everything sloshing around. But the crazy thing is that you're Jerome Powell. You have to kind of do, they've been foreshadowing everything and being transparent and trying to tell the market what they're doing, because nobody wants prices to go down. Nobody wants to be in office over anything and have the economy drop or have a stock market lower, no matter what they say. Biden looks at it just as much as Trump does. He just don't tweet about it. But they're playing with investors' emotions of confidence, right? Because if they wait too long and then announce this, and yields are what the market is scaring the hell out of investors, and people think it's out of control, and that will come to show. There's no other time in history where you haven't had huge inflation once you stir it up and try to calm it down. That's just, you can't control the world economy like a puppet in a string, and that's what they're doing. But if you wait too long, maybe you don't get the good reaction. Then what do? Now you're going to have to come up with some new QE silliness of whatever. But that's the aggravating part on my side when you're trying to analyze everything, cutting through the big gray areas to look at good companies and solid businesses.
Yeah, I mean, there's going to be sectors that benefit and sectors that don't. We're seeing the rotation of money out of tech. Yes, tech has made a little bit of a rebound here, but into cyclical names that have taken off. You're going to continue to see a rotation of money, not money being pulled, unless, we do see interest rates go higher. Then, we could see money leave the stock market, where I think a lot of bond money has gotten into the stock market, where negative yields were everywhere, and you still had a 1.8% yield on S&P 500, and risk on, super low interest rates. So which is great for equities and most assets. So it will be interesting to see how this plays out. Everything's fun right now. Everything's cool because everyone's getting checks and handouts and stuff like that. But I want to see how these businesses actually start performing. It was an easy environment for them. It was made easy for a lot of companies. They were able to cut costs. Now everything is opening back up, but you're going to see some winners and losers, like we saw with cloud. I mean, did you see the numbers from Oracle, and did you see the numbers from IBM with cloud?
Yep.
Oracle was not good at all. IBM was okay. The hybrid cloud that promoting $1 trillion industry that they're really getting it, that they're trying to dominate. But then you saw the numbers from Amazon, from Google, from Microsoft, and what a difference, right? So you're going to see separation between companies but the yield curve control is really, you could just throw a dart and you can make money. And that's going to, again, it's good till it's not good anymore, and it's going to really end up bad. But
who did Tepper, what did he say when they asked him, what's going higher? Everything. In response to, was that 2012?
Yeah, 2020, I think it was 2011, where he said, it's going to go higher.
I just love that. Everything.
And I was like, this guy's exactly right. You're looking at another hot topic is NFTs, non-fungible tokens.
Yeah, here we go.
We're going to go there or what?
Oh,
because
man.
I got to be honest with you. You know how I feel about that, but I want to hear your opinion
This
first.
is so amazing. I laughed because we were talking the other day about this, and I'm standing in the doorway dumbfounded. I couldn't believe Frank was so pissed off about this. I mean, he was probably getting upset at me because I probably looked like a smartass with a grin on my face. I wasn't prepared that you were going to be, he was like, this doesn't make any sense. And I said, hell, it don't have to make any sense. $69 million for a digital artwork that anybody can look at.
Yeah.
But like I said, humans are weird, all of us. We value scarcity and one-of-a-kinds. And whoever out there can say, hey, I got proof that that's mine. And evidently that's worth $69 million.
I mean, if you have art and it's on your wall and it's a very, very expensive piece, it's much different than seeing a picture of it, right? That's different. That's yours. You own it. When I see Rob Gronkowski saying, I want to, it's for my fans. It's not for your fans. It's for you. You want to make a fortune off of people being idiots right now. And it's funny because he can't even use the NFL logo for one of his digital pictures of him, catching a touchdown pass. He's going to sign it, so he owns it. And by the way, signatures mean nothing if you're alive. You could sign something 1 billion times when you're alive, okay? Signatures mean something for someone that signed something that died. Just something to know if you're going to be a collector, right? You want to buy rare stuff that's it's not rare for buying a LeBron James jersey, even if it's a championship jersey, since he's won a ton of championships, and it's signed because he could sign if he wins this year with the Lakers next year, he could sign 1 million more. So to sign something and he couldn't even use the NFL logo, right? He wasn't allowed to, so he had to change the picture, a digital image, and now to sell that and to make money off it, when I could actually go on YouTube and watch that every single day of my life and not pay a fortune for it, millions of dollars or whatever they're going to sell it for, tens of thousands, hundreds of thousands maybe. It's kind of funny how fads go crazy.
Yep.
Non-fungible tokens are for real. There's digital assets that make sense. I mean, they really are. So, I think that it's a good business. But of course, like we saw with the ICO industry, what happened? Right, the ICOs, cryptocurrency, they had something, but 80% of these, assholes just said, hey, you know what, it's a money grab, we're going to rob people. These people are so stupid, they don't even know that we're not giving equity in a company that doesn't exist. You don't have equity in them. So, and now I think it's something like 70% of these companies still don't have a working model, don't have any revenue, nothing. And again, they're going high because crypto's going high, but you saw a separation between the good companies and the bad ones and the DeFi projects. But with this industry and what they're doing NFTs right now, the one bullish thing, Daniel, I like about this is Peter Schiff hates NFTs.
Oh gosh,
that's why
his son is all in on
bullish,
Bitcoin, or maybe not all in. I don't want to, but I saw him tweeting, which honestly I just think is good PR. I think the whole thing is a put on. From what little I've seen, going online and arguing that your kid's in Bitcoin, you got to untrain him or train him to get back to common sense or whatever. I think that's brilliant PR. I could be wrong on that.
He's got a ton of followers. Look, I mean, he's an entertainment figure. It's sad that people go to him to make money and believe what he's saying. But he's entertainment. I mean, he's entertainment. That's how you have to look at Peter Schiff. And I have nothing personal against him. If you want to lose your money, listen to him. That's fine.
You know what's interesting? I'm glad you said that because you reminded me of this. And you know what's terrible about NFTs, Frank? Did you know how harmful they are?
How harmful are they?
Check out, I don't know this, but Shelley Palmer, Shelley Palmer from the CES, right?
Mm-hmm. I interviewed him. I interviewed Shelley Palmer.
His email, one of his emails that went out, he says, you just minted your first NFT. That's hot. You know what's hotter? The Earth. On average, minting a new NFT takes about 130 kilowatts of electricity. Is that right? That's about $27 worth of electricity in New York City. Why am I reading that? Because the same with Bitcoin and the same with NFTs, the same with anything that's going to grow and give a lot of individuals wealth is going to be looked at and negativized towards the green environment, the green movement. That's how you suppress, and that's what it's going to be. So I'm a huge fan of NFTs if globalists and environmentalists are against it. I hate to go against you, but just out of that, if Shelley Palmer doesn't like it, and I don't know him, but I'm sorry. If you're going to bitch about what it costs in electricity to do an NFT, I'm all for it, baby. We need one for Curzio Research. Let's cash in on this.
Let's cash in on it. I'll do the first podcast I ever did. I'll put a signature on it and sell it. I don't know. Maybe that would be worth something if I die tomorrow, but I don't know. I see the value in some of these things, but whenever I see, like, it's like SPACs, when I see celebrities, when I see, Kaepernick getting involved and Alex Rodriguez getting involved, it's time to worry. And you're seeing that with some SPACs. You're not seeing the crazy moves. You're seeing some of these things come down now. It's, Wall Street's business model is make money as fast as you can, leverage the shit out of other people's money, make that money as fast as you can, and always be liquid. And SPACs check off every single one of those boxes. And that's why every hedge fund is like, oh my God, I can't believe people are falling for this. All right, let's buy these things. This company was trading at $300 million valuation last week. We're a SPAC. We just took it over. It has a $1.5 billion valuation a week later because we're a SPAC and we took it over. Which, again, it's going to come back and it's just going to get ugly, just like we saw with a lot of these names, a lot of the ESG names, right? Look at Plug Power is getting destroyed again.
Well, hell, when you come out and announce you got to restate your financials, what do you expect?
Yeah, I know.
It's not going to have any position. It's not going to hurt cash positions. It's not going to hurt revenue, reoccurring. We're still going to meet guidance. So what the hell are you reinstating?
You know how I know that company is completely full of shit? Because whenever someone has like a huge negative headline, what do they put out? We're buying 2 liquefied plants from Trump
they're going to build or absolutely.
They put out at the same time. Oh yeah, and by the way, we're going to restate.
Hey, I respect the good news, bad news thing. I give them that. But yeah, that is funny. I was reading through it, and it's not going to impact anything or this or that. And I'm thinking, all right, well, this makes a whole hell of zero sense.
Yeah, but getting back to NFTs.
Oh, sorry, go ahead.
No, go ahead. No, I was just going to say, getting back to NFTs really quick is, I was poking fun at Peter Schiff because his posts are entertaining because he's basically telling everyone you're an idiot for buying Bitcoin since it was like 5,000, 4,000. And as it goes higher and higher, everyone, you're an idiot, you should have been buying gold all the time. And, he does it and he gets people riled up. And again, it's good marketing and stuff. But the fact that, he's hates NFTs and making fun of them makes me think this market has a lot more way to go.
Like I said, I'm all for it. If it's bad for the environment, I'm all for it. Take that headline and run with it.
Yeah. No, absolutely. You were going to go into something else before I break down.
Last thing. Just speaking of SPACs, eToro is going public via SPAC. And the reason that's really interesting, and I encourage people to look at this or at least watch it, is it's a crypto trading platform. But supposedly later this year, they're going to roll out the opportunity to invest in stocks. So the awesome thing here is that you would combine basically the Coinbases and the Robinhoods. So if you can go to one platform, and the industry is going this way, and everybody knows we're as excited as can be about it because when security tokens are easy accessible, and that there's no reason that shouldn't boom just like crypto and alternative coins. So when you can have the infrastructure and the platform in place for people like me and everybody else to go and either choose to buy Bitcoin or the Curzio Research coin or the T0 coin, plus Apple, Facebook, Google, GameStop, I think that's a big deal. So they're out first. I think it's awesome that they're out in the limelight. I like it with the SPAC. So I did want to comment on that because that's awesome. That's a big deal. This is a timestamp issue to watch for good or for bad.
Yeah, and I have to tell you something about eToro. eToro is a company that was an early adopter into the space. It's basically a trading platform. 20 million people are on this platform. I got a picture of it up right now. That's funny. They're promoting. It's great. So one thing I will say is a lot of these, and again, I like to hear from my crypto people out there, but I've been doing a lot of research, really a lot of research on this because I don't understand it, and it scares me that I don't understand it. Where I'm not too sure if eToro, I'm pretty sure they're doing it, but there's like 30 to 50 sites that do this that are pretty big names in the industry, right? So you're going to see probably a lot of takeovers or whatever. But what they're doing now is it's not just trading. It's not just trading cryptos. It's not just storing them. It's not just providing a wallet where you could do it from an app because there's hundreds of companies that do that. But now you could earn interest on your tokens. And this interest is sometimes 5%, 9%, 25%, 30% annually. And for me, when I look at that and trying to figure out how are these companies able to pay so much interest? Well, it's by leverage, by offering, other native tokens. You have to get in early to do this, but they have special algorithms set up and nobody shares these algorithms, right? This is the DeFi movement. Nobody shares these algorithms of how they're actually able to provide all this interest and stuff like that. And everything works. Everything works if Bitcoin goes higher, if Ethereum goes higher. That's fine. Everybody's happy. When these things crash, look out. Because when I can't track something and things, it's just like the credit crisis. And you're looking at the Fed, and this is 4 or 5 months in. This is after Lehman. After Lehman went under, they still didn't know how much that exposure AIG. And AIG was the key to the whole entire thing because they thought they were smart, insuring everything, making a fortune. And then, again, all these guys who decided to short the housing market did it through AIG, and AIG was left holding the bag, and that's where all the bailouts came in and stuff like that. So the fact that you can't track this, that they don't share the algorithms, how they pay that interest, it's interesting. But like you said, it is a SPAC, Daniel, and they are going into the crypto world. I've seen, I think, 2 or 3 of them venture into the crypto world. You're going to see more because these companies are forced, these SPACs, are forced to buy something that has huge growth potential. And right now, people see that as cryptocurrency.
Absolutely.
You have ESG names, space names, software names with cloud capabilities and AI all over it. That's what they need to focus on. Companies that are growing tremendously that they can inflate these valuations for. And eToro is one of them. But it's going to be interesting to see how this whole movement goes if Bitcoin does go to 30,000, which it could. 30, 35,000, 40. I mean, it was a 61, it's 54 today. It's coming off a little bit off of its all-time highs. But who knows? All this works when everything's going higher. When it's not, how are they going to make these payments? And one thing you can think of is if the government, not the government, but if our banks are paying almost nothing in interest, how are these tiny companies, compared to banks who have trillions in assets, the biggest banks, how are they able to pay 5%, 10%, 15% interest on all these things and not tell you exactly how that process works? You cannot find out exactly how that process works. You really can't. And that scares the shit out of me. And that's something that could be a major risk to cryptos going forward, but something I wanted to bring up. But eToro, good for them. They've been around for a long time. They are a legit company, but let's see, what happens in this market, right? I mean, it's pretty crazy what we've seen, Daniel.
Yeah, like I said, if they're on time and they roll out the ability to do crypto and stocks on the same platform, I think that's a huge breakthrough. And you'll no doubt have other companies follow. It's just who's going to be there first. And then, mergers and acquisitions. And it's great. It's just, forget what we're talking about. What's so exciting to me as just a history or a fan of history and markets is that whether it's Bitcoin, stocks, oil, NFTs, it doesn't matter. You have booms and busts. People are going to bid it up. People are going to fight for it, be against it. That's just fantastic. So that's exciting to me, and we'll see if they can roll that out, and we'll see what happens. But that's a good stuff.
No, it's really cool. It's really cool. So, Dan, thanks so much for coming in. Enjoy, because you are driving to Ohio, right? Right from here?
Nope, North Carolina.
North
Stopping
Carolina.
short of Ohio.
Right.
Going to North Carolina because my Ohio friends that I'm going to meet and play golf with, I guess, only go south until the weather breaks a little bit. So I'm going to colder weather.
It's going to be nice, though. Yeah, you're going a little cooler, but it should be 75-ish, I think.
No, not at all.
It's going to be that cool? North
Carolina, it's going to be in the 50s.
Is it really?
Low 60s if we're hoping, yeah. Oh, yeah. Check the weather.
Down to Florida. Took them to Florida. I should have booked that flight 6 months ago.
I didn't put this together. I'm just tagging along. I'm just going to show up and play. So,
yeah,
but it'll be a great time. I can't wait. And I'm hitting the road right after this. So, cheers, everybody. We'll see you next week.
All right, awesome, buddy. Thanks for coming on. I appreciate it. Okay, guys. So, last segment here. Most important, as you know, I always break down the Super Bowl, which is one of the things I do, and people love it. FrankCurzioResearch.com. Give me great feedback for it, because I most of the time always lose the Super Bowl, and which means that you do the opposite of me and you win, and that's all I care about. So have fun with it. But one of the things I do that is pretty good, that actually is much more accurate than my Super Bowl, is the NCAA bracket. March Madness is here. Yes, it's going to be a little different, and I'm going to break it down for you. So if you don't like college basketball, you can fast forward about 10 minutes, but I'm going to break down these brackets and tell you, my analysis. And I do this every single year. Didn't do it last year because COVID, the tournament got canceled. And of course, Kansas, which is my favorite team of all time, of any sport, was the odds-on favorite to win. They really had a really good team last year. I thought they had a very good shot to win. They were going to go in as the overall number 1 seed, and they canceled it, which, really pissed me off. But this year, we're having it. A lot going on. And again, I'm usually pretty good at this. College basketball is my favorite sport. I've watched it since I was 6 and played it since I was 6. Watch a lot of teams, not just Kansas. So I just love the sport, and I usually do okay with these, especially with my sleeper picks. And Jim Cramer, got a firsthand look at my NCAA tournament abilities in 2007 when he really started getting popular, and his show started getting popular. Mad Money just launched, and Sports Illustrated did a celebrity bracket, and they asked Jim to participate in, and he came to me and my buddy John, as a research analyst, to help him out, since Kramer, who is a big sports fan, just doesn't really follow college basketball that much. So we picked all the games from him after the first week. He was in first place. And we wound up placing well. We didn't have the actual winner. I think we had the runner-up. But he did really, really good, Kramer. And especially that first week, he was in first place. So he was really, really freaking happy. I mean, he was going, yeah, which is a big deal, right? I mean, Kramer's happy for us. I could have asked him for anything that week, his Skybox tickets for the Eagles or whatever, and he probably would have said yes, but that lasted about a week or two before, he started getting a little pissed at us again. But anyway, he would get a little angry if one of his picks go low from his portfolio. But, I do miss those times with the research analysts. We had a really great team with Kramer during his prime, watching him become a mass celebrity. Really, really cool stuff. But anyway, let's get to the brackets. So really quick, you need to know one thing before picking your bracket. Okay, sometimes it's better if you know nothing, right? And you could pick it, and that's how you pick upsets and things like that if you don't know anything. But for people who really want to try to win or, there's a big difference, right, in looking at certain things. And one of those things is the BPI. It's a power index for the NCAA tournament teams, which includes strength of schedule, defense, offense, total package. Also, I look at defense efficiency, which is almost, if I had to guess, 70 to 75% of the teams that have been in the top 15 on that list have made the Final Four, been 3 or 4 teams. And I bet you there's a lot of names in this tournament that are going to surprise you. One of them, Abilene Christian. Abilene Christian is a 14 seed. They're ranked number one in the nation in team defense efficiency. And they're playing Texas in the first round, and that is the East bracket. Now, Abilene Christian is in Texas, Abilene. And they were a D2 team until 2003, and they moved to D1. So they're going to be super pumped. They're playing Texas, right? It's like Wichita State playing Kansas, right? You want to beat them. You're going to be pumped. There's a lot of egos in there, right? Texas didn't play well the past 5 weeks. Texas likes to press a lot, but Abilene is also ranked high in assist to turnover ratio, so they should be able to break the press pretty easily. And Texas, their assist to turnover ratio, they're ranked 200 out of all NCAA teams in Division I. So Abilene Christian, number 14 seed, as an upset pick. And also watch out for Georgetown, the 12th seed in the East that played absolutely fantastic in the Big East tournament, which is surprising because if they didn't win the tournament, then they wouldn't have gotten an at-large bid. So they actually got the at-large bid by winning the tournament, but they were not going to make it unless they won a tournament because they really have a good year. But the last 3-4 games, they played great. Looking at the South, Arkansas is a number 3 seed playing Colgate as a number 14 seed. Colgate is a pretty good team. They're ranked number 2 in assist to turnover ratio, 3rd in 3-point percentage, which is huge in a tournament where you could bang threes from everywhere. So Arkansas is good, but it's going to be a close game. I don't know if Colgate's going to win, but that's probably a good bet against Arkansas, Colgate. In the Midwest, again, just talk about sleepers here. I like Syracuse. There's an 11 seed, very good team, ranked 33 overall in BPI, much better than their seed suggests. And I'm also not sold on a team they're playing who is San Diego State. And in the West, watch out. I know I'm going to say this, and I hate saying this. Watch out for the Kansas upset here. They're playing a team called Eastern Washington, who I'll be honest with you, I really don't know too much about them, but Kansas just came off COVID protocol. They couldn't finish the Big 12 tournament. And a lot of teams that went on this protocol in the middle of the year came back, and they just played differently over the next 3-4 weeks. Baylor's a good example of it. They were undefeated, then they got blown out by Kansas, and then they lost another game after that, but they did crappy for a few weeks. They're number 1 seed. Kansas may come out cold. Plus, Kansas, if you press them, they're dead. They have I've never seen a team with no point guard. No one can pass on that team. They're no passing skills, nothing, which means no fast break point. If they get pressed, they're gonna have tons of turnovers. I mean, that's easy if you're a coach to see from a mile away if you did just 10 minutes of homework on that team. Kansas is a much better team, better talent, but wouldn't be surprised if they just come out in this game really, really flat. So that's my double-digit sleepers. Now let's get to the West. The West is Gonzaga, very easy road. May have to play Virginia, who I'm not impressed with. KU's a 3 seed. They blew out Kansas earlier this year. Iowa is good, but not in the same class as Gonzaga here. When I look at this bracket, I mean, if Gonzaga does not make it to the Final Four, it's going to be a massive, 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 massive disappointment. Massive disappointment. Let me see if I can bring up this bracket here, if you're watching this on YouTube. And so you're looking at all these names here. You're seeing the number 1 seeds and stuff like that. But when I'm looking at Gonzaga, definitely the class in the West. Now let's go to East. You have Michigan as the number 1 seed. Great team. Hasn't played the best ball coming into the tournament, though. So Georgetown is a 12 seed. Maybe one of the hottest teams in college basketball. Past 4 weeks win the Big East tournament. Get an at-large bid. They are the 12 seed, right? So playing Colorado, They should win that game, I think. I think they're a better team than Colorado, even though the seeds don't suggest that. St. Bonaventure, also a solid team, ranked 26th in BPI, and they're ranked as a 9th seed, which is kind of high. Not sure if they could beat Michigan early on. The number 2 seed is Alabama, which should make it to the Elite 8. But the team I love in the East in this bracket is Florida State. Florida State I have to make to the Final Four in the East. The top 10 in three-point shooting percentage. They beat North Carolina, one of the hottest teams right now in the NCAA that have been playing great the past few weeks. Just Florida State's been really clicking. I like that team. It is a little bit of a long shot because they are a number 4 seed, and I know not too many people have them in the Final Four, but I do like Florida State. Get to the South. Toughest division by a mile. Baylor's the number 1 seed, and they're awesome. And I might have picked them, even though they haven't really been playing that good lately. By far, best backcourt in the nation, but they're really small. And they play North Carolina, which they'll play in the second round if North Carolina beats Wisconsin, which is not an easy game. But again, North Carolina's played awesome over the past few weeks. They could lose that game. I mean, North Carolina has a lot of height. They're very, very big. They're fast. They're clicking. I think they give Baylor a lot of trouble here. Baylor probably wins, but there's a risk there. Also, at Villanova, they have to beat Villanova and beat North Carolina, Wisconsin, just to make it to the Final 8, Baylor. So if you're picking Baylor, just think about it. They have the toughest road by far. Villanova's a really good team that could beat anybody but could lose to everybody. They're crazy. It's a really crazy team. They played some terrible games this year, tons of talent, and I've seen them put them on people this year. The top half, as tough as it is for Baylor, it's pretty easy for Ohio State. Really easy for Ohio State, who played very well the last 4 games. They beat all the great teams in the best division, the Big Ten, other than, in the final, right? Losing to Illinois. So when I see Ohio State and the road they have a much easier road until they get to Baylor. Baylor has to win a lot of big games. So I got Ohio State in that division, and that is the South Division, go to the Final Four. Now the Midwest real quick, Illinois is no 1 seed, has an easy road outside of Tennessee, which is a good team, but not impressed at all with the bottom half of that bracket. I mean, Houston is a number 2 seed, and they played absolutely nobody this year. I think they played one ranked team, which is West Virginia, as a number 3 seed I think they beat West Virginia this year, but they only play one team, and West Virginia is a 3 seed overall in this bracket. But Houston is number 2, and I went back and looked at all the games they played. Yes, they won by a lot, but they really haven't played anyone, haven't played good talent. I'm just surprised that they're a number 2 seed. They just won a lot of games while other people were losing, and they made it to top 8 teams in a nation. I just don't see them winning. I've seen them play a couple times. They are good, but I just think they rank way too high. So I have Illinois going to the Final Four, who's very, very good. Again, Ohio State played them great down to the wire overtime. So I have Gonzaga, Florida State, Ohio State, and Illinois. So 2 number 1 seeds, a number 2 seed, and a number 4 seed. So it's not chalk. I have Gonzaga beating Florida State in the semi, while Illinois should beat Ohio State in a rematch of the Big Ten Championship. I think they beat them again. Again, that should be a really, really great matchup. 2 amazing teams. And the winner, I know this is chalk, is Gonzaga. Gonzaga is my team to pick down the Nets. Look, they have 3 players up for the Wooden Award. That's, best player on the team. So they're all on the same team, 3 different players. Defense is great. They can run. They're fast. They have height. They could shoot. Their scoring margin is 23 points. That's ranked 1st in the nation. That's how much they beat teams by. And usually Gonzaga plays a crappy schedule. Not this year. They play a lot of good teams. A lot of good teams. They beat Kansas. They beat West Virginia. They smoked Iowa, who's a number 2 seed. They blew out Virginia. 13 out of 26 games, they scored over 90 points. They scored 90 points a game. Nobody's beating them at 90 points. And they scored 100 in several games as well. The only way Gonzaga loses this championship is if they beat themselves or they choke. In fact, I'll go out there and say this as someone who knows college basketball. I've never seen the number 1 overall seed this much better than the rest of the field, probably since UNLV in 1990, when they beat Duke in the finals by 40. And they were favored the next year, and Duke came back and won. Leitner, it was great, all that stuff. But they don't have weaknesses. The 3 guys that are going to go in the first round of NBA, and they'd probably be in the first 5 picks, because one of them is a senior, but one's a freshman, the other's a sophomore. And actually, they could be even better if they don't leave, but they're probably going to leave because they're first round picks. They have senior leadership. They have a great coach. And all that stat means that they probably won't make the Elite 8, right? But Gonzaga is my pick to cut down the Nets. I know a lot of you get so many emails on this, probably more emails on any of the subjects, so I wanted to break that down. I always like going through it. I love the NCAA tournament. Again, gives you a chance to watch basketball games all day Thursday, Friday. I used to watch with my friends all the time and go back to New York for 20 years and just, spend an entire Friday from 12 o'clock to 12 o'clock when all the games are going crazy. I know it's a little different schedule this time, but a lot of fun. Looking forward to it. Should be a really, really great tournament. So, guys, that's it for me. Covered a lot today. A little bit of rant here and there. Give you some COVID stats. Some fun, some ideas, like always. Thanks to Daniel coming on. And, of course, my NCAA bracket, which you guys will be able to destroy on Sunday after all the first week is over, I'm sure. So last thing here, guys, still getting a lot of questions on Dollar Stock Club, where we take a pick from our guests or interviews for Wall Street Unplugged and publish it in PDF format. Provide buy up to price, stop loss, a nice 1 to 2 page write-up, which is really cool. And it's pretty much $1 a pick. It's almost $1 a pick, where it's $4 for the month. But we try to have a pick almost every week. We probably have about 42 to 45 picks a year. And a lot of those picks have been really, really good, man. We've outperformed tremendously. It's a good starter newsletter. It's good to get new ideas. And you're not just getting new ideas from me listening to the podcast. You're getting new ideas from my guests. And some of those ideas they don't always share in the interview. They'll show before or after, or I'll look at their portfolios if they're running funds. And I'll look and analyze the stock and say, hey, these guys like this name. And that's the one I'm making in portfolio. So you can't just get it by listening. Sometimes that pick doesn't come from the actual interview part, but that's Dollar Stock Club. I mean, I created this product. I love this product because it's anyone could buy it. You can cancel it anytime, any month, whatever. Just go to our website, cancel. It's like 2 seconds. It's not a whole thing where you can't find a website or anything to cancel everything like everything is out there, right? You try to cancel a service that you pay a monthly fee to, you can't even cancel Disney. Try canceling Disney Plus. I'll give you $10 if you could do it within 45 minutes. There's no way. There's no way you could do it within 30 minutes if I'm going to give away money, I'd say. But anyway, Dollar Stock Club is available for you on our website, CurzioResearch.com. Be sure to check out our Curzio Research YouTube page where I broke down the bracket here, showed a lot of stuff, showed the research reports. Again, all this is in video format, and we did a lot of work to make that happen. We're really excited, and quality is great. It's awesome. Getting a lot of compliments for it. So be sure to subscribe to it. This way you get our podcast every single week through YouTube. And again, that Dollar Stock Club is available on our website, CurzioResearch.com. So guys, that's it for me. Thanks so much for listening. Enjoy March Madness. Have some fun. And I'll see you guys in 7 days. Take care.